Your ultimate pit stop, Piston Pundit, brings you breaking news from Detroit's auto heartland. In 2025 alone, more than 42,000 factory jobs have vanished, ripped away by tariffs that shattered supply chains and silenced assembly lines. Once loyal to U.S. production, Asian automakers are cutting back, shifting investments north to Canada, and leaving American families facing soaring prices and empty dealer lots. This isn't just policy, it's an industry earthquake shaking both consumers and workers. So what's really happening, and which automakers are steering through the storm? Here are the critical developments you need to know. Detroit's reality check. Jobs lost and prices rising. 2025 has shattered the belief that America's auto market could weather policy storms. Tariffs on cars, steel, and parts slammed into a just-in-time system, and the first crack was jobs. Assembly lines shut down, shifts vanished, and ripple effects spread through restaurants, suppliers, and schools, once fueled by factory paychecks. At the same time, new car prices spiked, making monthly payments unworkable for many families already burdened by high financing costs. Buyers turned to the used market, only to be hit again. With fleets holding vehicles longer, late-model trades dried up. Suddenly, 10-year-old sedans carried premium prices, while practical crossovers disappeared in days. Analysts warn this squeeze will linger until tariffs ease and production stabilizes. Meanwhile, the continental map is being redrawn. Some automakers are shifting capital north to Canada's growing EV and battery ecosystem, while others double down on U.S. production to dodge tariffs. This isn't one company's misstep. It's a structural reset of where and how vehicles are built. And among the companies most exposed to this reset are two industry giants, Toyota and Honda. Toyota and Honda, giants in damage control. When industry leaders stumble, the shockwaves are massive. Toyota warned U.S. tariffs could cost nearly $10 billion, forcing double-digit cuts to its operating profit forecast. North America even swung from profit to loss, with executives admitting visibility is poor, a rare admission from such a disciplined company. A provisional U.S.-Japan deal softened tariffs from 27.5% to 15%, but that's still 6 times higher than the pre-tariff 2.5% rate. Toyota's solution is to double down on its build where we sell philosophy. More than half its U.S. sales already come from American plants, and investments in batteries and components continue to rise. For now, it's absorbing costs instead of hiking list prices, buying goodwill with dealers, but billions in lost income show the strain. Honda faces a similar dilemma. With major plants in the U.S. and Canada, it's shifting CR-V and Civic hybrid production stateside, yet supplier networks still rely on imported electronics and drivetrains that trigger duties. The roadmap is clear, but the transition will take years, not quarters. Before we delve deeper, do us a favor and smash that like and subscribe button. This helps us reach more auto enthusiasts just like you. Now let's shift gears and steer towards our next point, how the smaller Japanese brands are weathering the storm. Nissan, Subaru, Mazda, Mitsubishi, struggling in tariff crossfire. Tariffs that bruised giants have pummeled smaller Japanese automakers. Nissan halted guidance after flagging billions in tariff costs. U.S. plants in Tennessee and Mississippi help, but reliance on imports and Mexico complicates margins. To cope, Nissan discounted U.S.-built models like Rogue and Pathfinder while pausing certain Mexico-built crossovers. Proof trade policy now dictates product cadence more than marketing. Subaru, heavily dependent on the U.S. with limited global scale, chose the bitter pill of price hikes across most of its lineup. Analysts warn billions in extra costs loom unless Subaru ramps U.S. production and localizes key components still imported from Japan. Mazda saw Mexico to U.S. exports collapse by half, pushing it to lean harder on its Alabama joint plant with Toyota. Prices are inching up, while incentives shrink to protect fragile margins. Mitsubishi faces the steepest climb, lacking U.S. capacity and risking its value edge if prices rise. The reality? Consolidation pressures mount. Alliances, platform sharing, or even strategic retreats may define survival. But while these smaller automakers struggle to keep their footing, Hyundai Kia is taking an entirely different approach, going on the offensive. Hyundai Kia's Georgia gamble, betting on local muscle. Hyundai has gone on the offensive, resetting profit expectations and unveiling an ambitious U.S. localization plan. By 2030, over 80% of its American sales will be built domestically, anchored by a Georgia complex targeting 500,000 units a year by 2028, blending hybrids and EVs. The message is clear. Tariffs are best dodged with local steel, suppliers, and assembly, and buyers will reward stable pricing. The shift carries costs. Hyundai trimmed margin targets, warned of heavier Q3 tariff impacts, and faced disruptions when Korean specialists commissioning battery lines in Georgia were detained in an immigration raid, an incident showing how trade, policy, and labor collide. Executives are now pushing Washington and Seoul for smoother travel rules for technical workers. Meanwhile, Hyundai broadens its lineup with more hybrids, extended-range EVs due in 2027, and a North American pickup before 2030. Kia and Genesis share the momentum, already exceeding 1 million units of U.S. capacity. If tariffs endure, this early bet could leave Hyundai Kia ahead while rivals scramble. And as Hyundai Kia invests heavily in local capacity, the ripple effects are already being felt by consumers and supply chains across North America, especially with Canada rising fast. Consumers, supply chains, and Canada's advantage. While executives adjust strategies, households feel tariffs directly. Costs flow through 3 channels: duties on imported cars, duties on foreign parts inside U.S.-built vehicles, and pricier raw materials like steel and aluminum. Few models hit exemption thresholds without expensive redesigns, so some automakers raised stickers, trimmed features, or leaned on dealer incentives just to keep sales moving. The used market reveals the fallout. With new prices outpacing wages, trade-ins shrank, fleets held vehicles longer, and supply of clean, late-model cars collapsed. Buyers with $28,000 to $35,000 to spend, once ideal for a compact SUV, were forced into older crossovers with higher miles and fewer safety upgrades. That squeeze carries long-term consequences for safety, emissions, and family budgets. Canada, meanwhile, is capitalizing. Federal and provincial programs are attracting critical minerals, gigafactories, and supplier parks, offering policy stability and USMCA-friendly trade. Each project in Ontario or Quebec tilts the North American map. The reality, build where you sell, isn't a slogan. It's the new survival blueprint. All of this, the squeeze on families, the scramble for supply chains, and Canada's rise, leads us to the bigger question: what does it all add up to? Verdict: America on a tariff tightrope. This isn't a simple story of 8 Asian automakers fleeing. It's a reset of the entire North American playbook. Toyota and Honda are absorbing billions in losses while scrambling to keep production local. Nissan, Subaru, Mazda, and Mitsubishi are cornered, forced into price hikes, alliances, or even considering retreat from certain segments. Hyundai Kia is turning Georgia into a fortress, gambling that deep localization pays off. For buyers, the outcome is sticker shock, dwindling used car choices, and uncertainty about when affordability will return. For workers, the next wave of jobs follows whichever companies can rebuild supply chains inside North America quickest, whether that's Michigan, Georgia, or Quebec. The real race is about speed and scale, and the clock is already ticking. Now we want to hear from you. Do you think Hyundai Kia's Georgia bet is the smartest move of any Asian automaker? Or a costly gamble if tariffs fade? With Toyota and Honda absorbing billions, how long can they shield buyers from steep price hikes? And looking at Canada's rise, could the auto heartland of North America slowly shift north of the border? Drop your thoughts, experiences, and predictions in the comments. And that brings us to the end of today's deep dive. If you enjoyed this breakdown, don't forget to hit that subscribe button and tap the bell so you never miss the next vehicle update here at Piston Pundit. Thanks for watching and see you next time. You can now check out any of the videos on the screen. There's plenty more to explore.